Imagine a 100-meter sprint. The stock market with the S&P 500 and the NASDAQ is basically a runner who is already halfway down the track, just breaking records left and right.
Yeah, they are flying right now.
Exactly. But the crypto market, I mean, it is still crouching at the starting line, basically tying its shoes. So today we are bringing you a deep dive into the Vantage Plus weekly analysis. This was published on Monday, August 10th, 2026. We want to figure out exactly why crypto is lagging and what the trigger might be to finally get it moving.
Right. Well, it really comes down to the market waiting on a massive dual catalyst. The equities market is running on its own economic momentum, but crypto, it needs a specific injection of broad risk appetite and, crucially, regulatory certainty.
The regulatory side is huge.
Oh, absolutely. Right now, the entire space is basically holding its breath for the U.S. Digital Markets Clarity Act.
Okay, let's unpack this. Because if this Clarity Act is the starting gun, it is not going to sound the same for every asset, right? I mean, Bitcoin is already widely treated as a commodity. So this bill isn't really about Bitcoin, is it?
No, not at all.
It is really about the smart contract networks, so like Ethereum, Solana, XRP.
Yeah, if we connect this to the bigger picture, that distinction is everything. The Clarity Act is designed to finally define whether these specific tokens constitute securities.
Which has been a massive gray area.
Exactly. If Ethereum and Solana are cleared of that heavy, restrictive regulatory label, institutional capital that has just been sitting on the sidelines can finally engage with them. Fundamentally, they are the biggest winners here.
I do have to push back on that logic a bit, though. If Ethereum and Solana are fundamentally the biggest winners of this impending legislation, why don't their actual technical charts reflect that independent optimism?
That is a very fair point.
Right, because looking at the Vantage Plus data, they still seem completely handcuffed to whatever Bitcoin does. I mean, if they are so fundamentally strong, why the disconnect?
Well, that is the real frustration of the current market, and it really comes down to the physics of liquidity flows. Big institutional money rarely jumps straight into the riskier assets, even if the fundamentals are improving.
They want a safe harbor first.
Precisely. They test the water with the biggest, most liquid, and safest asset first, which is Bitcoin. Until Bitcoin proves the market is healthy by breaking its own resistance, that big capital just won't trickle down into the altcoins.
So Bitcoin isn't just the market leader, it is basically a snowplow. It has to clear the heavy resistance on the road before the smaller cars behind it can safely drive forward.
That is a great way to look at it, yeah.
And looking at Bitcoin, it is currently trading around $60,844. It just broke above its 50-day moving average.
Holding that crucial 60K monthly support, too.
Right. But the real snowdrift blocking the road seems to be that $67,000 zone. Why is that specific number such a massive roadblock?
Oh, well, that is because of market memory and trapped capital. That 67,000 zone was a major support floor back in February.
Okay.
And when the price fell through it, a lot of buyers were trapped holding losses. So now that the price is coming back up, those same buyers are selling just to break even.
Just trying to get their money back.
Yeah, exactly. That turns old support into massive new resistance. If Bitcoin can smash through that ceiling, it absorbs that selling pressure, gathers steam, and finally signals to the market that the water is warm.
Which means the cars driving right behind the snowplow can finally hit the gas. Let's look at Ethereum. It is currently trading at $1,913.
Yeah, it has some work to do.
It does. It has to break weekly resistance at 1925, but the real prize is 2,000. So what does this all mean for the psychology of the market?
Well, that 2,000 mark for Ethereum isn't just a round number. It is the line in the sand where algorithmic trading bots and institutional models are programmed to flip from bearish to bullish.
Wait, really? Just based on that one number?
Yeah, pretty much.
Yeah.
Breaking 2,000 officially signals the end of Ethereum's longer-term downtrend. It just completely changes the entire narrative of the chart.
Wow. And as we move further back in the pack, we see Solana and XRP. Solana is trading at $75.70. It actually looks healthy. It broke its 50-day moving average just like Bitcoin.
Yeah, and if it pushes past $85, it breaks its own long-term downtrend.
Though we should note, falling below the $70 floor keeps it stuck.
What's fascinating here is comparing that to XRP, which is currently hovering at about $1.03.
Mm-hmm.
XRP is essentially the car that slid off the road into a ditch.
Ouch. That bad.
Yeah, the Vantage Plus report notes its upside momentum is just totally absent. If it breaks below its $1 support, that downtrend is going to accelerate rapidly. For XRP to even reverse direction, It needs a massive breakout above $1.20, and the buying pressure simply isn't there.
So to bring this all together for you, the crypto market is stalled out, desperately waiting for Bitcoin to clear that $67,000 snowdrift.
And waiting on Washington.
Right, waiting on Washington to pass the Clarity Act to finally join the stock market sprint.
Yeah,
But here is where it gets really interesting and a thought to leave you with today.
I'm listening.
If that Digital Markets Clarity Act does pass and it officially clears networks like Ethereum and Solana from being labeled securities, could we eventually see a market where they no longer need Bitcoin's snowplow? Could they completely decouple and start racing on their own track?
That is the million-dollar question.
Something to keep an eye on for sure. Thanks for joining us for this deep dive, and we will catch you next time.